Okay, so let's see if you are better if you're better if you use a considerably higher take profit. Let's say 50. What can you do with a 50 stop loss, 50 take profit and a 200 stop loss? Let's see. As you see, as you just it is more discipline to have higher take profit, but as you see, it is not that bad as if you use the 15 take profit. Of course, you can be profitable with a simple RSI strategy, so it won't be, profitable, but it is, but you won't blow your entire account multiple times, and that is something for a beginner. Let's see. Let's just go ahead and take a look if we use like 1-to-1 risk to reward ratio, because in this video I want to show you the power of knowledge and the knowledge of statistics and how you can have some advantage over the market even with the worst fucking strategy in the world. So let's see how we perform with 1-to-1 risk to reward ratio, because I don't recommend to use a simple, RSI strategy, so don't do that. But I want to show you some stuff and how you can protect your account even if you are using a bad strategy. So this is not an advertisement for this strategy at all. I don't recommend to use this strategy, but I just want to show you some statistical thinking of how you should approach trading. So let's see if we have a 1-to-1 risk to reward ratio, but a little bit higher take profit and stop loss, because there are numbers that are a little bit better and a little bit worse for Forex trading and to long-term profitability. So yeah, it is just not quite good. It is, yeah. So I want to show you how you can just try out different parameters. And first, I don't really recommend for you to optimize with biological algorithms, because you won't understand what optimization is and how you can actually do it by hand. And as you see, there are better. So this is one other thing. Traders don't believe me that you can be profitable with a really low take profit and stop loss level, even if you are using 1-to-1 risk to reward ratio. And they don't believe me somehow. And so in this video series, I will show you some real facts and why you actually have to use a minimum pip stop loss and take profit, even if you are using the good risk to reward ratio. So as you see, it is not quite bad, but it is not good at all, because it is 1.5 years and you made like 5%. And on other currencies, who knows? So let's see another currency and how it works out. But the key is to learn how to tweak parameters and don't rush to optimize parameters because of magic numbers and because real optimization requires a lot of patience and knowledge actually. So yeah, so I really encourage everyone to just learn a little bit of coding, because it is not that hard to code the simplest EAs. Of course, if you want to make some really complex price action patterns and systems, that is tough, that is hard, that is a complex project, but if you just want to test if a simple strategy works or not, it is not that easy. It is not that hard. Sorry. So let's see for the next part. Let's see if we can tweak the RSI levels a little bit to make some more out of this one simple indicator. I should tell you that I won't have so much hope, but for, you know, because this is, and if you are, especially if you're a beginner, you might think that if you know some indicators, that is an advantage over the market, because most traders just click away and they follow signals and stuff, or just click on the, I don't know, best looking chart and buy or sell. But the problem is that now we are living in a world that is growing exponentially. And yeah, there were times in the 80s where if you knew a technical indicator, you had a really big advantage. But now we are trading against artificial intelligence and stuff, so knowing what one indicator won't be enough. So